The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, the first chart that I posted into Tiger TV today was the Biotech Index, ETF IBB. And as you can see, a week or so ago, we hit the, it was last week, as a matter of fact, we hit the exact 786 retracement. We came down just a few days, and now we're rallying back. Not quite at the old high of the 786 level, but still very, very close. So it's still, the judge is still out. As you know, the NASDAQ is the stock market on steroids because it's just 100 of these NASDAQ stocks, and they're all, cap weighted, and there's really a lot of expensive ones in there. So it doesn't take much to get the NASDAQ moving into new high ground, which in fact we've done. We have not made a new high in the S&P, nor we've made a new high in the New York Stock Exchange Index, which is the one that I follow the most closely because that's the fairest of all of the stock market indices because it tells pretty much where we are. As you can see from the chart that I posted in Tiger TV, we have not taken out the high of the 24th. That was one of our P-index dates. We also had one on the 26th. And so far it has not, violated the one on the 24th. It's very unusual to have a P-index dates come so closely together. One of the things that I was able to do with the help of my good friend Steve Rhodes was to go in and take a look at the P-index dates that we've had so far this year. And we've had 7 of them, and we've had clusters of 2. Now, these are the P-index dates that are only three aspects or less. This does not include the ones that are 14 or more. It really makes no difference whether it's 14 or more or 3 or less. They still have the same amount of power. And as you can see, of the ones that we have posted here, there was only one that was wrong, and that was the one on Memorial Day on the 27th. Regarding some market statistics that we have that are going back to 1885, the last day of the month is one of the most positive days of the month, the last trading day of the month, which is today, and then the first 3 trading days of the month, which will be Tuesday, Wednesday, and Thursday, are also very, very positives. So we're looking at 4 days here that the market traditionally, statistically, has an up day. And not a lot. Usually it's a 0.25% to 0.5%, something like that. It's nothing like 8 or 9% or 2%. It's a fraction of a percent, but it still has a positive bias, and that is in fact what we are having, in the Dow Jones, not the Dow Jones, but within the NASDAQ and the S&P is also, slightly higher today. So these P-index dates are very, very accurate as far as the cycle timing part of it. I don't believe we're going to take out the high of June 24th in the New York Stock Exchange Index. We might be able to do it in the S&P because that came in at 1960.25. The old high was at 1960, so it only took it out by a quarter of one tick. So it was really a very, very non-confirmation of a new high. The cash index itself did not take out the high. It was only the futures, that actually did that, and we'll see if that historically means very much or not. But we're over some pretty significant times right now, and I believe that it's really hard to be down on the last day of the month when you have an up month, an up week. It's really hard for the market to be closing lower today just because of window dressing and stuff like that. It might not close a lot higher, but I don't think it's going to close a lot lower from this level just because of the logistics of what happens to Wall Street with these mutual funds and stuff that do window dressing at the end of the month, and this is the end of the quarter. So this is, just an unusual day. Now tomorrow will be a, altogether different scenario. of what's going on. The real action today, folks, is happening in the markets for the commodity markets, particularly the foreign exchange markets. We've had some really big moves occurring. One right now that we're watching very, very closely because it's at such a critical level is the Japanese yen versus the U.S. dollar. We are setting right at a ABCD 786 Gartley pattern in the dollar yen, yen dollar, and as you know, this has a very high correlation with the Nikkei. So if this thing does not hold the 101 level, that tells us that we're most probably getting ready to go down. We had our first question today from someone, and they asked me the question of what country will be the next to do an overnight devaluation. Well, I would like to tell you that. I really would. But believe it or not, I am absolute last person that they tell when that stuff happens. They go through everybody else. They go through grade schoolers, elementary schoolers, college kids, graduate students, when they're everybody on Wall Street, not on Wall Street, and the last person that they tell is me. I have never gotten any inside information, folks, and I've been in this business for 53 years. I've gotten inside information. None of it ever worked. I mean, I was at Drexel. We used to get tips all the time, and it was hilarious. All you had to do was fade them. But I've never really gotten one that was actually, valid. I wouldn't have acted on it. Maybe not. No, I wouldn't have. But it's just if I'm going to act on one, I got to act on all of them. So I wouldn't have done it. But I've never gotten one, and I don't know about you folks. Go back and look to see. You talk to your neighbors or whatever. It's just I just never have gotten one that's any good. You stop and think, if someone's got inside information. And you're a stranger to them, why in the heck are they going to give you any information like that? I mean, that's ridiculous. Stop and think. It's just not feasible to actually think like that. That's in my opinion. Okay, we got one other. There's actually three of them that look really interesting, but the two that I wanted to focus on this morning are the Japanese yen and also the euro. Because the euro is making a 382 retracement of the high that we made way back in May. So 6 weeks ago, we made a high up there at the 786 at the 139. We came straight down for a whole month. And for the last month, starting on June the 5th to where we are now, we've made a 382 retracement, and that's where we're trading at right now at the 136.90 level. So if the euro is bearish, it shouldn't get much higher than where we are today at this 136.90. We took out last month's high, the early month's high in June 5th. We took that out by just a little bit, and we're just setting at this level right now, and that's where we really take a look at it. Oh, we got a lot of comedians here at TFNN. One of them said, the reason why I've never got a good tip is because nobody likes me. You're probably right. Well, whatever it is, I haven't gotten a tip now, and I don't expect to ever get one in my lifetime. So we'll see if history makes any type of a thing like this. I have to tell a funny story from my Drexel days. This was one of the best ones. There was a back in the late mid-70s and stuff, when I worked at Drexel from 76 through 82, the market was in a trading range, really. It went nowhere from 1,070 in the Dow down to about 500. It was trading at around 780, something like that, I forget. But the stock that was the real hot was Resorts International. It was a gambling stock, as I recall, and it was really flying. It was typical to what Google not Apple. Well, Apple at one time, but Google, Tesla, Priceline. It was one of those stocks that was going crazy. And what happened was Drexel put a notification that the only way you could short the stock was to put up 200% margin. And I'm saying, oh, my God, 200% margin. I said, this means the stock's getting ready to go down. And so I went into my boss, because I didn't trade stocks, and I asked him, I said, why are they putting 200% margin? He said, well, we don't want our customers to lose money. And I said, can I sell the stock? And he laughed. He said, I won't say blankety blank, but it ended in ing. Idiot. He said, if you want to, he says, it's your money. He says, you make enough, sell some. So I sold, I think it was trading at about 90, so I sold 200 shares, and I put a $12 stop on it because the average range on the stock was about $8. So I went 150% more than the range of the day at 92. The stock it topped at 93. And in 4 days, it went down to 73. And I didn't know anything about inside information. All I was doing on acting the fact that, everybody was on one side of the market, so I had to at least nibble at it from the thing. That also had a really nice 3-drive pattern on the daily basis, which was primarily while I did it. But I remember that very, very vividly from one of the few stock trades that I ever put on during that time. So. The next thing we need to talk about is the utility index has gone into new high ground, folks. That's been it has been lagging the market for a while. It backed off, and then over the past several weeks, the utility index went up and has made another butterfly pattern up here after we had the correction down here in early June. We've been basically straight up, completing a butterfly pattern now in the utility index. We'll also take a look at the Dow Jones Transportation Index. It has not made new highs yet, but it's not far away from making it. So, we're in the topping process here. When I was, going over my charts this weekend and looking at everything, I was, looking at the long-term charts, and I'm saying, okay, what is different this time? And folks, let me tell you, there's nothing different this time. It really isn't. This is just a longer-term pattern. It's taking a long time to finish. The bear market in 2009 finished very, very quickly. This one is taking a little bit longer to finish. But when you look at this long-term Dow Jones Weekly or the S&P 500, you're looking at some things that are really, really negative with these expanding triangles that we have here. And these are the more of Gartley's patterns that were the best probability-wise. And they're very, symmetrical and harmonic and all the other things that you could ask for. It's just that it hasn't turned down yet. But when it does, they're not going to take any prisoners. I firmly believe that. And, we'll see. I'm sitting here with my scaling stick on. They're ready to climb the mountain when they're ready to turn it down. But right now we see no index, no sight of that happening as of yet. The cash S&P has not taken out the high of the 22nd of June, which was 23rd of June, which was the P index date, and all we did today was to make a little 786 retracement of that, at least so far, and it's still very early in the day. Okay, we got to take a little break here. Dow down about 18, gold struggling back, and the euro is holding its own.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've had a request. I've talked about this expanding triangle, this 1, 2, 3, 4, 5 expanding triangle that Gartley called the T6 pattern. I believe it was on page 219 in his book, as I recall, and it was one of the more highly predictive of the patterns that he looked at, the expanding triangle. Wells Wilder turned it into a trading system called the reverse point wave back in the early 90s, and it was very popular, but it does have a high degree of profitability and probability. And someone asked me if I saw one just recently in something, and it was something that we talked about earlier last month, and that was the soybean trade. The November soybeans were completing that same pattern, the 1, 2, 3, 4, 5 expanding triangle. And today the grain markets are really getting decimated. Corn has broken into new low ground, making new lows through that double bottom, which we've sort of been expecting for a while. And wheat has had some really wild swings today, too. We've had a 20-cent down move in wheat and then a 16-cent up move in wheat. So, wheat is a lot thinner than corn and beans, so that's not unusual to see swings like that. But to see 20 down and 17 up, 37-cent swing in wheat, they're not taking any prisoners over in that market for sure. So, but that's the pattern, is that 1, 2, 3, 4, 5 expanding triangle. We're seeing that on the long term, monthlies and just about everything else that we can see it in. I will put the chart in for corn right now because we talked about this over the course of all these shows that we do, and we watched this double bottom right now, and I'm really interested now because we're breaking down into new low ground, and we have a smaller pattern here that would give us a a pretty good idea of what we're looking at. So I'll put that pattern in here, and you'll be able to see December corn. And then you'll also, if you'll look at the pattern way back in last May, a little over a year ago, you'll see that 3-drive pattern, the 1, 2, 3 highs. We have the 3 higher highs culminating with an ABCD, and then that was the top of the market. Then we made a big ABCD down, and we rallied well over or right around $5,000 a contract. And now we're going into new low ground, and we're going to have some interesting patterns here come later this week. Now this is a shortened week, as you know, folks, because of the 4th of July, and the big reports will be coming out on Thursday instead of Friday. So, and it's going to be very thin because, believe me, all my friends on Wall Street are they're leaving either real early Thursday morning or Wednesday night. So there's not going to be a lot of, you can't really say that anymore because we have computers and everybody can have a laptop or a cell phone. So I don't think you can say that anymore, because years ago that used to be it. They used to leave the exchanges and, the volume would just dry up. But now with the cell phones and the Androids and Apples and iPhones and all this other stuff, I think that's pretty much. That's pretty much. I don't know. I don't know if they do a half hour or half a day on Thursday. I'll have to double check that. Somebody at TFNN will probably know that whether they do a half day. I don't know if they do that or not. But the day before a holiday has about a 75% chance of closing higher that day. In other words, any day before a holiday, whether it's Christmas, Thanksgiving, Memorial Day, whatever that holiday is, Easter, that day before that, it will be a positive close about 75% of the time. It might not be up much. It could be up a lot, but that's usually what that is. So we have a lot of positive, statistics this week for a higher market. The fact it's the last day of the month, and then the first 3 days of the month are also very positive. And then one of those days is the day before a holiday. If the market closes down during that time, boy, it's fading a lot of really, really strong statistics. So we'll have to see what history decides to do. Someone asked me a question, am I buying December corn? No. All I'm doing is looking at December corn. We've broken into new low ground. We crashed through that double bottom. What I will do now is I'll go down to a smaller time frame, and I'll try to find a spot where I think we will be able to do it. But we have a really wide-ranging bar today. It's already down, it's down 20 cents from the close that we had just on Friday. So this is no place to be looking at trying to be long corn from this level. Had you been long corn, you would have had to stop in at least break even at the very worst, and we were waiting to see if that double bottom. So we're going to take a little break here. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've posted into Tiger TV the VIX index going back the last month. And basically, you can see that we're also seeing that same 1, 2, 3, 4, 5 expanding triangle that we talked about with the long-term stock indices, the November soybeans, and we're also seeing it now on this VIX index chart. But remember, this is a relatively short term because it is only a month's data, but there is a really nice 19-day cycle that's in here that has been operating, that bottomed right where it should have. Then we had a pretty good rally up to the 786, and so far we have not broken below the 61% retracement of the low that we made back on the P-index date back on the 22nd. So whether this is going to be a turn in the VIX or not, it's still too early, but like we've mentioned before, it is really a lot of positive statistics in the market, stock market, for not breaking very much the last day of June or the first day or two of July, the fact the end of the quarter and all the other statistics that we happen to mention. There is one other commodity that I wanted to talk about, which is one of our favorites, and that is the gold market. We haven't backed off at all in the gold. I'm just going to show, we've been here for well over 3 weeks in the gold market, and you can see here we've just made a few patterns. Today we made a really nice Gartley pattern down at the 311 area per ounce and $311 per ounce level, and all we've done so far is had a little minor $8 per ounce rally in gold. I still believe that gold is very bullish, but we'd really need a nice breakdown to the 382 around $1,292 per ounce level. That would really be nice. Now, folks, we're not having any inflation across the grain complex. I mean, soybeans are collapsing, wheat is collapsing, corn is collapsing, cattle and hogs are still going higher, but that's just a function. It takes so long to make baby pigs and baby cows that it's they don't do that in a short period of time like you can grow corn and stuff, and so that's why you're looking at higher meat prices. As a matter of fact, I think I told the story. I had to go over one of my neighbors. I shop for him because he's 91 years old, and he wanted to buy a nice T-bone steak. And so I went over to the market, and when I checked out, I couldn't believe how much it was. It was £1.50 pound, and I think it was $23 for a steak. Of course, you can eat off that for 3 days, but boy, that's expensive meat. Back in the 70s, the housewives were actually picketing when cattle were at 80 cents, and now they're at $1.50, and you don't see them picketing anymore. I guess they have enough from their savings on all the things that we get from our government, our entitlement program. So whether that's going to be an effect on this or not, I'm not absolutely sure. We have another market that is at a really, really critical level, folks. It's acting pretty nicely, and that is the crude oil market. We've been down for 9 days now. We stopped right at the 382 retracement today at the 105 per barrel level. The last time we had a 9 days down, it was at a 50% level, and then we rallied $7 a barrel. So if crude oil starts to get strong in here and we can get above 108, we would be looking at least 112 as a price objective in the oil. And if, as we know, these things that are going on in the Middle East are always, instrumental in making some of these things rally. But we've had two perfect retracements here in oil over the last 2 months. We had one in May that was 9 days down, and we're just completing 9 days down today, but it's completing at a 382, not at a 50%. That means it's even more bullish. And so that tells us that as long as we can stay above $1.05 per barrel, we've got a chance of the market having a pretty good rally along this line, right in this area right here. I've had one other question today, and as I made the comment about people that are always worried about leaving money on the table. In other words, you buy something and you get out of it and then it goes up and up and up and up, whatever it is. Folks, the only way you cannot leave money on the table is if you get the exact high or the exact low. The exact high when you're selling and the exact low when you're buying. And folks, that does not happen very often. It doesn't happen to me. And it doesn't happen to very many other people. There's only a few trades at that point. We've got a call from Victor in New Jersey. Are you there, Victor?
Yeah, I just want to know where do you think corn's going? I see it's up $15.
We're down about $20 or 20 cents right now. There's a small butterfly down in here around the 425 level, but with this wide-ranging bar, Victor, you have to wait a day or so. There's just no way you can stand in front of this with this long-ranging bar, and you're not getting any help. The other grains are hurting. Wheat bounced back pretty good, but the beans are getting smashed pretty good. So I would have to say, stand aside for a few days. If it's going to turn, it'll give you plenty of chances to buy it. But I can't buy it in here. I was waiting for the double bottom to occur and to knock out those, but you don't knock it out by 20 cents. That's a lot of selling.
Yeah, when can you have Art Crawford back on too? I haven't heard him in a while.
Oh, very good. In fact, I talked to Arch over the weekend, and I'll try to get him on Wednesday's show. Thanks for reminding me. I'll do that. We talk about everything except market stuff when we talk. So
see what he's thinking.
Well, the last time I spoke with him, which was yesterday, he still thought the market was in a topping process, but he said that he didn't, he couldn't pinpoint a date. And I said, get in line because no one else has been able to do one either. So We'll wait and see. But, Victor, I will try to get Arch on the show on Wednesday.
Maybe there'll be some kind of attack overnight tonight.
Oh, that I don't think that'll make any difference. Look what happened when they took over that little country in, what was it? I can't even think of the name of it now.
Ukraine?
Crimea. I mean, nothing happened, so I don't know if that means anything or not.
The Russians are coming. Run. No.
The Russians are probably long. That's my guess.
Yeah, right? They control all the metals anyway.
Well, they control some of them for sure.
Yeah. All right.
All right. Thanks for calling in. I certainly appreciate it, and I will give Arch a call, and we'll try to have him on either Wednesday or Thursday. Okay. The request was to have Arch Crawford on from Crawford Perspectives, who's our dear friend. He does a lot of astrological things, and we certainly want to try to get him on if we can. We have another Forex market that is really in very, very technical poise for a really strong move, and that is the U.S. dollar versus the Canadian dollar. We've completed a 3-drive to a pattern down at this area. We're right at the 382 retracement of the low from September of 2012. We're at a 61% retracement of the low from September of 2013. So we have 2 major cycles coming together from both being in September, which means there's probably a seasonal factor there. So we're at a really strong point here at 106 and change here in the Canadian dollar. And as long as the Canadian dollar can stay above 106, it's got a pretty good chance for I would think, a significant rally. That would be my assumption of what I think is going to happen to the Canadian. The dollar is pretty much at the moment of truth here now based on the Japanese yen and on the euro and on the Canadian, also the Australian. They're all poised. We should have some really big moves here in the next few days because we're setting either the dollar's getting ready to scream to the upside or it's ready to put the white flag up on the pole. We still have the jury out on that, but its moment of truth is coming very, very closely in the currencies. Boy, the pollen here in this desert during the summer can really be wicked. And I've never had any allergies, but unfortunately we have such incredible flowering here that it makes me sneeze a little bit. I hope it wasn't too bad to look at anything here. Okay, we want to take a look now at the Treasury bonds. We've had a big move in Treasury bonds we talked about last week. The market broke almost $1,000 off of the 61% retracement that we made up into that area of 137.10. We came down to 136.20 today, and right now we're back to the 137. We're still pretty close to the top, but it looks like this Gartley pattern in the bonds certainly tells us that we're ready to at least get ready to have a pretty good correction in that. I know that some of you folks trade the TBT, which is the ETF for the Treasury bonds, and you can see that completed a perfect Gartley on Friday, and it looks like it wants to move a little bit higher, and as long as it stays above that 60.25 level in the TBT, it looks like we have a pretty good chance for a little rally there. I really don't care for these ETFs, folks. They don't always follow the market like they should. GLD, the gold and the silver, some of those certainly do, but some of these others in the bonds and other stuff, I don't see it. I just it's too easy to trade the futures than to trade the ETFs. Of course, if you can't trade the futures, then the ETFs can be your second choice, but they don't always follow along the way you'd like for them to do that, and that's the problem of when we're watching some of these things occur. I wanted to switch over for just a second to show the longer term picture going back the last year in the Nikkei, which is the Japanese stock market. And as you can see, we've had a Gartley form up at the 61% retracement at 15,500. Remember, that index used to be at 39,900 back on December the 29th of 1989, before it started a 23-year bear market, where it went down to just under 7,000, I believe, in 2002 or 2003 is where it completed the final bottom. And, of course, we had a 38% retracement a year ago, and we're still in lower tops in the Nikkei. This has also completed a head and shoulders pattern in the Nikkei, with the left shoulder being in May of last year, and then the head, which was in December of last year, and then we just completed the right shoulder just a few days ago. We've already started down in that level, in that area. So that's a head and shoulders pattern, which is a very popular technical pattern that is quite accurate, but it's in the neighborhood of about 70%. Only one or two patterns are higher than the 80%. That's the 3 drive to a top pattern, which runs at about 85%, and then the 1, 2, 3, 4, 5 expanding triangle that runs in the 90% category. In other words, it's right about 90% of the time. But boys and girls, listen to me closely. When it fails, it really fails. So you have to use stop-loss protection, because when those expanding triangles keep expanding, step out of the way. Shut the front door and raise the rent, because it could go anywhere it wants to go, and you've got to be, very, very careful. We saw this happen in silver and gold a few years ago, where they exploded up to $1,900 per ounce in the gold and $49.50 in the silver. And they went about $20,000 more than we were expecting. But when they finally did top, it gave you a place to finally look at it, and you were able to, to finally, get to the short side. We have very little positive information from the open interest in any of these things. There's very, very, very little open interest increase in the metals. We're having no open interest increase in the stock index futures. It's just really, it's really acting, very, very suspect. Now we're having some sympathetic selling, it looks like, in the crude oil market, because we've now broken below that 105 level that we were talking about, which is at that 382. So we're getting down this 104.90 level. We're breaking down now in the crude oil. Whether this is going to be margin call related or not, because you realize that there's many hedge funds that are deal only in commodities, and when they get hit in the grains, they start selling other things, whether it's gold or crude oil or whatever it happens to be, just to cover margin. So that's one thing that you have to be looking at. But we'll take a look here on the short-term chart of crude. You can see what's happened here in just the last few minutes. We've lost a dollar a barrel just very, very quickly in crude. So this could be the start of a failure in this. But boy, the longer-term daily on this has a lot of support at that 105 level. And we're only through at 20 cents. We've really got to get below 104. In other words, a dollar a barrel under our level before the real selling comes in. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of the next big technology bull market for less than $40 per month. Log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, good afternoon, folks, and we're going to end the show. We've had a request to take a look at Amazon. Probably it's hailed as one of the greatest stocks ever. They have specials on it now on CNBC about all the things that Amazon does. And as you can see, back in December, the market made a 3-drive to a top pattern up around the $400 per share level. That was right around the end of the year, right around December 30th. Actually, it looks like it was around early January. It made the 3rd drive up there at the 406 level. It came all the way down to 285. And so far, we've had 2 very strong rallies. One happened in January through March. It rallied 2 months. It rallied from the 333 up to the 380 area, $50. And now we went from 285 up to 335, $50. So both of those rallies were very equal. That shows you Isaac Newton's 3rd law of motion. For every action, there's an equal but opposite reaction. We've had both of those. We've now had 2 lower tops in Amazon. This is a weaker than market stock. It's in a bearish mode ever since last December. Each of the 50-point rallies have stopped at either an exact 61% retracement or exact 50% retracement. So the bias to Amazon from a technical standpoint has to be to the downside. There's no other way to look at it because you have lower tops, lower bottoms, equal rallies that are failing to make new highs, and you're having some incredibly good news. You know, they even have a special on CNBC for 1 hour about what a great company it was. They complained a little bit about the margins, but that was going to be fixed by doing something, whatever they're going to do. I don't know, some creative accounting of some kind. But maybe they'll have Arthur Anderson come back and work the magic that they did with Enron. We'll have to wait and see. But anyway, Amazon is in a bearish mode, folks. There is absolutely no other way to look at it. If it can ever get above $350 per share, then I would say, you know, all bets are off and we could assault the old highs. But frankly, this stock is it's in some trouble here. And if the market ever does turn down, this will be one of the stocks that will lead the market down because it's a weaker than market stock. And you want to buy the strongest stocks in a bull market and sell the weakest stocks in a bear market. So if the market does start down, you want to look to sell things like Amazon because it is a weaker than market stock. You don't want to sell things that are making new highs all the time, because that's it. I posted the chart of Goldman Sachs in there, Goldman Sachs, and you'll see that it also is in a bear market. It just had a 786 retracement a couple weeks ago. It's been down for almost 9 days now with virtually very little rally. It's also weaker than market stock. So those are the ones that you want to look at to see if the market is going to eventually have a correction of maybe 1% in the Dow. They keep talking about 17,000 in the Dow. That's possible. I used to hear 5,000 in the NASDAQ. We never got there. We're still not there. The NASDAQ's only at 4,500. And if you remember, the NASDAQ came very, very close, within just a few points of 5,000 on March the 24th of 2000 before it gave up 85% of its value. The Nikkei Dow topped in December 29th, 1989 at 39,000 and change, and all the newspapers were reporting it as 40,000 in the Nikkei, and it went from 40,000 down to 7,000. Again, Sir Isaac Newton, third law of motion, for every action there's an equal but opposite reaction. What goes up must come down. Maybe this will be the time that it doesn't happen, but so far Sir Isaac has been pretty much spot on. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.